We have a vesting schedule for the airdrop, and this is true for every holder. This includes anywhere from large hedge funds that you are talking to all the way from individuals and DeFi investors. Everyone has the same vesting schedule, which is 20% unlock at TGE, and the remaining 80% is vested over the next 6 months. So this is the standard term.
That is not a very long vesting period.
Yeah.
So
Yeah, exactly.
If we took, okay, just for fun, stay with me. If we took that 20%, so 0.2 times 7.5, oops, I should do an equal sign there. That would be a 1.5%. So we just added 1.5% on top of that, let's call it 5.5%. That gets you to a 25% net. And that's just that's the base. That's what you'll get on day one. And then you will vest the remaining 100% in Shift tokens over 6 months, which is not a long time. Okay, so that's really cool. Thank you for pointing that out. Welcome to a special video. Today we are joined by Coinshift. Now, if you guys don't know, actually, I'll let you introduce Coinshift. I know Coinshift as another one of these interesting interest-bearing stablecoins, but you guys have arguably the most fascinating partners in this space, and maybe are doing a TG super soon, all of which makes you guys pretty compelling in the short term. So I'll let you introduce Coinshift and what you think makes it particularly neat in this space.
Thank you, Stephen. So let me introduce Coinshift. We started Coinshift back in 2021. So we are a 4-year-old company. And when we started off, the vision was to build a neobank on the blockchain, similar to a Brex or Revolut or Aspire, for example. And the idea was very simple. You can do your payments, accounting, and asset management if you are an on-chain business. So that was the vision. And since we basically launched with a payments feature and where you can do mass payouts or batch transactions on top of Gnosis Safe. That was our flagship feature. And then we organically grew to over 300 plus organizations using us, including Aave, UMA, Gitcoin, Zapper, Starknet, and others. In total, they have processed over $1 billion in payments and $1 billion in AUM. So that has been our bread and butter so far. And just fast forward to this year, we launched our asset management arm. So from payments and accounting, we also launched asset management through a product that we call CSUSDL. Coinshift USDL or CSUSDL is a yield-bearing stablecoin. Think of it as holding T-bills and also lending out on DeFi. So you have two components on the yield on CSUSDL. One is the T-bill yield, which is in partnership with Paxos. Paxos is, for those who don't know, is one of the largest stablecoin issuers after Tether and Circle. They work with PayPal, MasterCard, and Stripe. So we partnered with them. They have launched a yield-bearing stablecoin called USDL out of Abu Dhabi. It is fully regulated by the FSR in Abu Dhabi, and it's basically a rebasing token, which means if I hold $1 in USDL, it will grow to 1.01, 1.02, and so on. And
no, you mean like your holdings would grow, not the value.
Exactly, the holding itself grows. So it's like let's say AUSDC in Aave, for example, where your balance grows in your wallet. This happens
or STETH for those who may be more DeFi native.
Exactly, STETH as well. So you have, especially on the daily basis. And then to basically make it more composable in DeFi, you need to wrap it. So USDL becomes WUSDL, which is an accumulating token similar to WSTETH. And then now you basically deposit WUSDL into a Morpho vault. And on Morpho, once you deposit, the Morpho vault receipt token is called CSUSDL. So in short,
now you've said a lot. Let me try to understand to make sure I get it.
Yeah.
USDL is a dollar-denominated stablecoin that is also rebasing. It is backed by two things, as far as I understand. One of them is T-bills, so it's backed by T-bill yield, but also through lend side yield on Morpho.
Not the USDL, that is the CSUSDL. So let's just say USDL is backed purely by T-bills.
USDL backed purely by T-bills. This is issued by Paxos?
Yes, issued by
Okay.
Paxos.
Issued by Paxos, T-bills, probably has an intrinsic yield of what, like 3%?
Yeah, it's about 4% now. So
4%?
yeah, it fluctuates between 3 to 5. Yeah.
Awesome. It rebases, so you get more of it in your wallet over time. If you wrap it, then it becomes what we call like yield bearing or intrinsic yield bearing. It grows in value over time. So one wrapped USDL will be worth more over time. You can think of wrapped staked ETH or any like SUSD, any staked wrapped version. You guys know these things. We don't have to explain them. And then, so now you have this additional layer, which I think is not immediately intuitive to most of us DeFi people. CSUSDL. And so what you're saying this is you're taking wrapped USDL,
Yeah.
depositing wrapped USDL into a Morpho vault as collateral or as lend side liquidity?
On the lend side liquidity. Yeah.
Okay. And then the receipt for that is CSUSDL.
Exactly. You got it right. And just to add more, so what are you lending against? So you are lending wrapped USDL against collateral assets like CBBTC and wrapped staked ETH, which is the Coinbase BTC and Lido's STETH. So in short, a BTC holder or an STETH holder can come and deposit their collateral and borrow WUSDL, and that's where you get the additional lending yield on top of this WUSDL. And we can go more deep into why you would borrow WUSDL, but yeah, that's it. Yeah.
How much is there? There's supplied 36 million, and liquidity means unutilized. Is that right?
Yeah, so it's basically exactly 30 million of WUSDL is sitting in the vault, and about 6 to 7 million has been borrowed against BTC and STETH.
I could see a huge appetite for borrowing this against like PT assets or other assets that had a higher stablecoin yield. So you have cash on cash. Because one, there's deep liquidity, 36 million. And two, that would push up the interest rate of CSU. I don't need to get into tokenomics, but I could see a lot of interesting use cases for this, especially on Morpho when you have so many markets for cash on cash like strategies. So Coinshift USDL is wrapped USDL deposited into Morpho, and you get a wrapper against that. It is typically used for loans against volatile assets like CBBTC, wrapped staked ETH. You also have CSUSDC, which is a wrapped version of a Coinshift wrapped version of USDC lent on Morpho. Is that correct?
Yeah, yeah.
Okay, got it. I thought so. That makes sense. I'm starting to understand the wrapping things here. Now I know there's a place to see the collateral. What am I missing? It's somewhere in here. Is this it? Market allocations?
It's the collateral as in so CSUSDL is actually a Morpho Vault token. Now the interesting part of CSUSDL is we are also the first Morpho Vault token that can actually be listed as collateral again to borrow USDC. So it's like, okay, I deposit WUSDL into the Morpho Vault, I get back CSUSDL, and now I can again list CSUSDL as collateral to borrow USDC.
Right.
And if you think of, let's come back to the treasury use case. Why would you do this? Let's say as a large B2B treasury, I have, let's say, $100 million lying around, which in stable coins, which is not making any yield today. So let's say I park some of that money into CSUSDL, which is a T-bill plus lending, which is a very low risk profile, is how we have it. It's an institutional grade, low risk stable coin. So I, let's say, put 50 million into my into CSUSDL. And now let's say I still want some immediate liquidity to run my payroll or expenses. And instead of selling all my T-bills to get to USDC, I can just simply borrow against it to run my day-to-day operations. So that's the real use case that we see. And of course, for DeFi native users, you can do a lot more things on top, which is to leverage and also just borrow and actually look for other opportunities while also farming CSUSDL.
Or you can loop it, which is something that I would want to do as a leverager and kind of DeFi degen for cash on cash yields, which is what you guys are sort of offering. Which brings me to the next kind of point. One, who's curating this? Are you guys curating this yourself? So is it one of those situations where the USDC lent to CSUSDL is that CSUSDC vault?
Yeah. So we have two vaults. So let's take a step back how Morpho markets work. So you have a vault, which is a separate protocol, and then you have markets, which are again a separate protocol. They call it Morpho Blue, just Morpho. So you have Morpho vaults and Morpho. And essentially, when you deposit into the vault, it gets redistributed into different markets.
Yep.
And that right now on the CSUSDL vault is curated by Steakhouse Financial, which is one of the largest curators.
So they have their major vault, which is Steakhouse USDC. This is like their big. Well, they also have Smokehouse, but this is their big vault that deposits into all sorts of different markets. Looks like they're currently supplying 131 million. Holy cow, good for them! And they also have the Coinshift USDC, which is curated by Steakhouse, but is a specific market, I imagine, for this.
Yes, that's right.
You have getting it.
Yeah, you got it. And essentially, USDC is coming into the CSUSDL market. So CSU and CSUSDL holders can basically borrow USDC from these larger vaults, which are curated by Steakhouse.
And let's talk about why they would want to do that. Because I think it's not immediately obvious unless you poke around a little bit and see what's happening. So if, for example, you went to Coinshift and you went to transparency because you wanted to see what the yield was, you might see this number up here. We'll talk about this number up here in a second. But you're probably going to look for this, the USDL APY. And you think, okay, well, if the USDL APY is 3.66% and I'm borrowing at a rate of 4.81%, that's a negative carry. Why would I do that? Why would I loop that? And there's two reasons. The first of which is, well, the actual yield on CSUSDL is 4.95%, not this underlying 3.66. So 3.66 is the Paxos yield from T-bills. Yes. Now explain the difference between this 3.66 and this 4.95.
Yeah, you got it right. So basically, why is the difference? So first of all, T-bill is being lent out. So there is a lending yield. And if you can hover on the 4.95, you'll also see where that additional yield is coming from. So this native APY is basically the yield that CBBTC or STETH holders are giving you, which is right now quite low and actually more attractive to borrow WUSDL at a low interest rate. So that is one. And then the other component is the Morpho incentives itself, which adds another 1% in this market. We have seen it go up to 7 or even 8% in the bull market. So that actually adds token incentive model on top of your T-bill and lending. And you also have shift incentives, which we can talk about in a bit. But essentially, the Morpho market is already live. So the Morpho incentives adds the remaining 1% or so.
So before we get to the shift incentive, which is probably the spiciest part of what we're going to talk about, let's just look at the math here. So 4.95% against 4.81%. It's not going to be a crazy yield, guys, but it's going to be a positive carry. This is before talking about shift. So that's where things get spicy. So 495, 481. Let's do 4.81, 495. So that's an 8.81% max leveraged yield. But before we max leverage, can you talk to me, if you know, how oracles work here? Is it an NAV oracle? Is it a market rate oracle? Is it a hard-coded oracle? What kind of oracle are we dealing with?
Absolutely. So the oracle that CSUSDL uses is called a fixed rate oracle, and it's basically using a very basic ERC 4626 convert to assets function. So the way it works is let's take a step back. How is WUSDL price calculated? The way you explained it earlier is every time the USDL supply goes up, the price of WUSDL is calculated on chain. It's fully mathematical. There is no oracle like Chainlink or anything that actually takes the price. It's entirely
the NAV increases, the backing increases.
Exactly. And the same logic applies from WUSDL to CSUSDL. So it's like you're parking WUSDL into the vault, and the price of CSUSDL is also entirely mathematical and on chain. So there is no external Chainlink or third-party oracle that we use. This makes the oracle actually you can actually go to this contract here, which says, let's wait for it. So
I tell you, websites have been so slow in DeFi recently. Like Cloudflare specifically has just ruined a lot of the DeFi experience. I will say it's been so hard to go to. Dex Screener was fine for me today, but the past week, Dex Screener was just so hard to get to. I was like using CoinGecko, like just CoinGecko's website to get pricing. Okay, so if you go to the feed and quote feed, go ahead.
Yeah, if you go to the price directly, so you see the price of CSUSDL, which is about 1.02.
And that's the NAV of CSUSDL denominated in USDL.
This is, exactly, in USDL, or you can say USDC to be more accurate, because this is the CSUSDL USDC market. So because
Okay.
you're pricing CSUSDL in terms of USDC.
So that's great because if you're borrowing USDC, it's good to have a NAV oracle for CSUSDL USDL or CSUSDL USDL, but it's even better to have an NAV oracle for CSUSDL and then the actual quote asset of the market, which is USDC.
Exactly. Yeah.
So this is what I would call an NAV oracle or a fundamental oracle for those wondering, which means that a market price I don't even know if you guys have do you guys do like big deep liquidity, or are you guys doing all through contracts directly?
For deep liquidity, what do you mean exactly?
Like, are you doing incentivizations for LPs for like liquidity
Yes,
provision
yes.
on like
Yeah, we have
Uniswap or?
exactly. Yeah, we have, I mean, for incentivizing on the shift, we do have for all LPs who deposit into this vault get shift incentives for this. Yeah.
But what about like liquidity pools? Do you guys have liquidity pools, or is everything done through the contract?
We have liquidity pools for, yeah, we do have a balancer pool for which has a 5 million size. So you can swap for smaller amounts. You can use the balancer pool.
Okay,
Also
so there
for
is like
larger,
liquidity, yeah. So there is a market rate price, and if there's a market rate price, that means there could be a market rate depeg that is completely unrelated to the actual backing of the asset. This is dangerous when you're using a market rate oracle, which is why I'm so happy that you guys are using an NAV oracle. That's also why, guys, you could have a higher LLTV, right? So this is a very high LLTV relative to most markets, 96.5%. Again, that's 28x leverage at max. There's still a risk though, and so I want everyone to know that even though you can't get liquidated from a market rate fluctuation, which is amazing and really nice and great, you could get liquidated if interest rates work against you or if the net carry goes negative. So if the borrow cost begins to exceed the underlying yield, or if you're not compounding those morpho emissions or tokens, then your LTV can slowly increase towards that LTV. So, I don't recommend max leveraging, going what I would say balls to the wall. Maybe don't go crazy with it, but you could do, 90% LTV and have a huge buffer of interest rate to sort of wait until then. Now let's get to the spicy part. I think the spiciest part is Shift, because I was looking at your website and I check on it, every now and again, and I see that Shift TG is very soon. So I have two questions. One, what's going on there? And then two, how much longer do people have to farm these incentives?
Yeah, absolutely. Great question. So let's talk about the Shift token. First of all, like why it makes sense and why do we have it? So the first thing is Shift is Coinshift's governance token, and it majorly acts as a reward token on top of Morpho in this case for your holding any Coinshift asset. And the reason why we have Shift token is also because we make revenue from each CSUSDL that is being held. So we have two parameters on the revenue. One is the AUM fee or management fee, as you call it in traditional finance. We have about 20 basis points from Paxos that is being paid to us for management fees. And then we have a performance fees, which is on the Morpho vault. Currently it is set to 0 in the growth phase, and we can also set it slightly, and again based on governance. So in short, for every CSUSDL that is being held, we would make roughly about 20 to 30 basis points as revenue. And if you take that and also burn it in and buy back in Shift, you will now have a very, I would say.
Oh, so saying you take the revenue, the 20 bips on the AUM, effectively CUSDL or WUSDL?
On
USDL, right? The total value of USDL would be the NAV effectively that is getting the 20 bip performance fee.
Exactly. Yeah, you can say whatever WUSDL is logged into Coinshift earns the AUM fees right now. Yeah, which is
so okay. So that's like, let's say, 20 bips on 36. It's a non-insubstantial amount. It's a reasonably interesting amount for buybacks and burns. Now, is it like 100%? That would be insane if it's 100% buyback and burns. It's probably some percentage of that also
exactly.
goes to.
And for all of these decisions is where we have a governance, so we can decide how much to buy back, how much to burn, and what other assets should we support down the line. And all of this is what the real role of Shift is. So it's a real governance token backed by revenue, and it's also like basically helping us to bootstrap liquidity and to grow CSUSDL faster. And this also unlocks a lot of other opportunities like going into Pendle for fixed rate derivatives. We will be live on Pendle very soon, and that is the next unlock for us. And again, like borrowing USDC and doing leverage strategies on Shift, this is another exciting opportunity that we see. So these are the unlocks that Shift also gives us, which helps us to bootstrap and grow the liquidity. And at the same time, it has a sound economic model through token buybacks and burns. Yeah.
Well, let's go back to the Pendle model. So Pendle, to me, would have made sense during the Shift TG campaign because you could have generated the rights to these Shift tokens in the future. After Shift launches, what is the Pendle narrative then?
Absolutely. So we are currently launching about a 2-month maturity market, which also aligns with the TGE. As you know, like TGE dates are usually subject to slightly changing. I mean, we are always pushing hard to get it live as soon as possible. But let's say we have the first maturity that is somewhere near to our TGE. The next maturities could also be basically on continuous shift distribution that is happening over time. So there is always this variable yield that you can speculate on. Okay, how much could the T-bill yield go? How much could the lending yield go? Or the morpho or shift. So there are like 4 components for this yield. And based on these speculations, you can either buy a PT and fix your rate, let's say at 8% or 10%. You can buy YTs if you are more bullish on shift and morpho and all the yield components in general. Or you can just provide LP. If you are just holding CSUSDL, you can just do an LP and get Pendle incentives and swap fees for facilitating the PT-YT trades. So a lot
And
of
then you could also potentially take those PTs and leverage them on Morpho against anyone like the CSUSDC, maybe, or the CSUSDL.
Absolutely.
Because theoretically, there would be a higher rate on the PT than anything else because of these ephemeral Shift tokens. So let's look at this again. So Shift TG in 30 days. If I were to enter today, does that mean I get 30 days of farming these incentives?
Absolutely. So for each day, for each dollar you keep, you get a fixed amount of Shift tokens. While we don't have fancy points program as such, what we do give is direct Shift allocation, and you can read more about it on our docs. So based on every dollar that you keep, you get a fixed amount of Shift, and for 30 days you will get that. And of course, through leveraging, you are basically increasing the number of Shift that you would get per dollar per day. So that is the simple math, and yeah, that's it.
Okay, next question is, if that is the case, and I know we've done some math before, like it's depending on the TGE, could be if it's 150 million FTV, that's an additional 7.5% on your principal, or 7.5% times leverage on your notional, which gets crazy interesting. And then we can, of course, go up or down depending on what you think the FTV is going to be. Now, I've done some math. So if we were going with super, super low estimates and just saying 8% net collateral yield, that means that the max leverage yield goes from, I don't know, it was 11% to 95%. And that is assuming a very unlikely low FTV. If you go with the 150, which is 7.5% additional, that puts that at 11.5.
Yeah.
That ends up being 195%. Now, I think yes, really exciting pie in the sky yield. Love to look at it, love to speculate on it, and would love to realize that. But I think what people need to know is that there is some vesting mechanism involved in the Shift tokens. You are giving out a great incentive package, but it comes with a caveat. Can you explain how the vesting works?
Absolutely. So we have a vesting schedule for the airdrop, and this is true for every holder. This includes anywhere from large hedge funds that you are talking to all the way from individuals and DeFi investors. Everyone has the same vesting schedule, which is 20% unlock at TGE, and the remaining 80% is vested over the next 6 months. So this is the standard term.
That is not a very long vesting period.
Yeah. Yeah, exactly.
If we took, okay, just for fun, stay with me. If we took that 20%, so 0.2 times 7.5, oops, I should do an equal sign there. That would be 1.5%. So we just added 1.5% on top of that, let's call it 5.5%. That gets it to a 25% net. And that's that's base, that's what you'll get on day one. And then you will vest the remaining 100% in Shift tokens over 6 months, which is not a long time. Okay, yeah. So that's really cool. Thank you for pointing that out. And you said Shift will be for governance, so effectively assuming where all of the revenue generated from the underlying Paxos USDL gets directed, and also there was another part that I missed.
Yeah, there is the AUM fees and the performance fees. So the performance fees is, let's say, on the lending yield, let's say right now it's very low, it's let's say 0.3%. And from there, if we charge, for example, if we charge a 10% performance fee down the line, that would be another 3 basis points for us. And of course, based on the lending yield going up, we can make another, let's say, 10 to 20 basis points on the performance fees. So it's the AUM fees and the performance fees, very standard revenue model, like similar to a hedge fund where they have an AUM 220 is the standard rule there, and we have a very similar model. And yeah, that's our revenue model, which flows back into Shift. And at the same time, we have a active governance model, which would be going towards progressive decentralization. So initially the Shift holders would have vetoable rights as to what assets that we add and what we don't want. So that is where we start with, and then over time Shift holders can actually actively participate in governance and add more proposals to the Shift governance. Yeah.
Okay, so the next thing that people need to know is if they're going and they're playing with Coinshift, which clearly backed by Paxos assets, that's great. You love to hear it because that's what you want. You want something with a really, really rock solid NAV. The question becomes, what is your trajectory? Do you guys always plan on being sort of like the T-bill plus lend yield assets, so always slightly better than a T-bill, or do you guys have plans to incorporate other yield sources, or is there like some big composability push you're looking forward to? What is the future sort of post TGE for Coinshift to be competitive in like this hyper competitive stablecoin marketplace?
Yeah, beautiful question. So there are two ways to answer this. One is what's next for Coinshift on the big picture. So we do see, coming back to our main B2B business, which was our bread and butter for payments and accounting. Our first observation there has been like large organizations hold over $200 million in stable coins today, which are not earning any yield. So the idea is to actually distribute CSUSDL to our existing B2B users. So that would be the first immediate step. And of course, to get there, the more TVL that we have, the more trust you can get and easier it is for large organizations to move their treasury. So that is one distribution angle, if you will. And of course, we have a lot more strategies in terms of going into wallet integrations to other custody and so on. So that would be how we plan to grow CSUSDL to like $1 billion or more. So it's a very laser focused product for us. We don't plan to add too many product strategies for us at this moment. But when it comes to composability, we do see like in the collateral side of CSUSDL. So just to recap, we have WUSDL against BTC and ETH, but we can potentially add other blue chip stable coins or other blue chip assets in that front. For example, super states, USCC could be an interesting collateral. We are talking to their team right now to figure out how we can work together. So a lot of other T-bills T-bills might not make sense because you're borrowing a T-bill. So any other, let's say, basis trading asset or delta neutral strategies or any other strategies, but at the same time it's also secure and regulated, and that's the angle that we are looking at, because at the end of the day we want to be very low risk asset. So that is where we see like a lot of synergies on the collateral side, and we can expand upon a lot more assets down the line. For example, even PaxG, which is Paxos Gold, could also be an interesting asset there. So those are some of the assets that we are looking at right now.
I mean, I think a lot of people this year would have thoroughly enjoyed an interest-bearing gold, considering how well gold performed versus, well, I won't say which assets we all might have been holding that didn't perform quite as well as gold. So that's fascinating. Now, if people want to stay on like the cutting edge of Coinshift yields, Coinshift opportunities, what's going on, where do they find you guys?
So first thing is to follow us on Twitter. We are very active and we post all updates, all partnerships, and all news about our TGE would be on our Twitter. Also keep an eye on our website and the app. And the best way is to also join our Discord. You can find the links on our website as well. And once you join our Discord, you can basically keep up to date and ask any questions that you have in terms of like how the yields are calculated and We have a lot more DeFi integrations coming soon as well. As I said, Pendle is one of them that we are looking at. Our existing integrations include Contango, Gearbox, and if you are into leverage looping, and we're also planning to integrate a lot more down the line. So all of that, again, Twitter, Discord, and also keep an eye out on our website. That's all.
Fantastic. Well, thank you so much for joining. Is there anything else that we should know just for the good of the order?
I'm good, Stephen. It was a great chat. I'm super excited for the Shift TGE, and we are heads down focusing on making this a huge success. And yeah, hopefully you join our mission of making Web3 neobank with payments, accounting, and asset management. That's all.
Well, thank you so much for joining. This has been fantastic. I learned something. And everyone, go check out Coinshift. Go check out follow the X so you guys have cutting edge updates on what's going on. If you have any questions, of course, get in the Discord. Being in the Discord, Telegram trenches, it's the best way to get alpha, in my opinion, and best way to stay ahead of the curve. Thank you so much for joining. And everyone else, have a wonderful rest of your day. All right, awesome. That went really well.